Subscribing to the True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.
Hello, I'm Barney Hawkins, Investment Director at True Potential, and welcome to Morning Markets on Friday the 4th of September. Markets have opened weaker this morning after Wall Street suffered its biggest fall since June as technology stocks sold off dramatically. The tech-heavy Nasdaq index was down 5%, with the broader S&P 500 down 3.5%. European markets, which had started yesterday in positive territory, followed Wall Street down in afternoon trading, so that by the close, most European markets were down between 1% to 2%. Asian stocks were similarly affected overnight, with the Chinese and Far East markets again down by between 1% to 2%. The tech sell-off had been hinted at by activity in the options market, which is increasingly being used by institutional investors who've become wary of some of the valuations being given to tech stocks, but are also fearful of missing out on what have been spectacular gains in the tech sector. Tesla, the electric car maker, has jumped 81% since announcing a share division in early August. Now, while a stock split puts more shares in issue and, in theory, makes the company's shares more affordable, it doesn't actually make any difference to the intrinsic value of the company. And the spike up that Tesla has enjoyed in the last 3 weeks has led some commentators to question the basis of this heady valuation. Apple, which earlier this week was valued at more than all of the FTSE 100 companies put together, fell back 7%. Now, there's often a clear end of summer, back to school feeling about the market in early September, and this year that sense appears to be even more intense. I think in part this may reflect the very odd year that COVID-19 has given everyone, but it's also intensified by the sharp recovery in financial markets that we've seen relative to a more muted recovery in economic fundamentals and also by the looming US election. The VIX index, which is an indication of expected volatility, generally rises ahead of a US election, but this year it's particularly high, and oddly it continues to be elevated until after the date of the US vote, suggesting that volatility will continue after the election. It may be fearing the prospect of a second term for the Trump administration or a contested result should Biden be victorious. Either way, it looks like autumn could have its fair share of speed bumps this year. Aside from weakness in the US, the UK Chancellor's innovative Eat Out to Help Out scheme has been hailed as a great success. On the last day of the scheme, Monday's bank holiday, bookings were up 216% on the equivalent bank holiday last year. The scheme has proved more popular than many had forecast, and some restaurant chains have undertaken to continue the initiative into the rest of the year. Today we get important non-farm payroll figures in the US. Now, these will be scrutinized for indications of how the broader economy, and not just the tech sector, is responding to the stimulus that's already been applied to boost employment levels, and also what effect this may have on the fortunes of Trump and Biden as the race to the White House continues. As I speak, the FTSE 100 has recovered some of its poise, and it's now up 28 points at 58.79. Have a good day, enjoy the weekend, and we'll speak to you again on Monday.
Thanks for watching. If you enjoyed this video, please leave a like and don't forget to subscribe to the True Potential YouTube channel. If you have any questions or requests for future videos, let us know in the comments.